broadcast. So now we are live and I'm basically allowing everybody to join. So give us a second to connect. And okay, so we're Facebook Live, and then let me go back to our shared screen. Keynote. Can you see now?
Yes.
Okay, perfect. So I think everybody should be trickling in. And let me just find my mouse switch. Okay, there we are. Okay, let's give it a few minutes for people to jump on. Welcome, everybody. We're going to give it a few more minutes for everybody to come on. All right. I see Jennifer. Welcome, Eunice. Helen, welcome. I see some old names and some new names. Wilson, our president, is on. Min Hong's on. Chloe, welcome. Barbara, welcome. Alicia. All right. Let's see. So it is 12 and we actually got on live a little bit later than usual today. So we'll just give it another 2 minutes for everybody to come on. Right. And then where are my KB ladies? Okay, perfect. Hey, Carolina, there you are. Okay. Welcome, welcome. Thanks so much for coming on time. We'll give it a few more minutes. Welcome, Mona, Nate. Welcome, Henry. Okay, so before I get started, like always, I'll go ahead and take care of some of our housekeeping items. If you're logging in from your computer, I know a lot of us are super and over familiar with Zoom already, but just so you know, there will be a Q&A section at the end of our presentation. And just to make sure you have your questions in the Q&A box instead of the chat box. So there's two areas of participation. You can type in the chat box or you can type in the Q&A, but if it's a question, please make sure you click on the 3 dots in your menu and find that Q&A button on that menu and type in your question over there. And that way we can keep track of it, make sure that gets answered. Lastly, to stay current on all of our social media and on all of our events, please feel free to add us on WeChat and Facebook if you haven't already. And we'll start basically doing a off-market deal sharing networking event starting from next, I believe 2 weeks from now. So the 4th Thursday of January, the 28th is going to be our next event. And Phong, here's what we'll do. I think what would be easiest, since I have these slides already up, what I'll do is I'll just pass you the control for your section, and that way you can click through your own slides and we don't have to kind of re-upload and upload. Is that okay?
That's fine. Remind me again how much time you want me to speak for, because I may not go through the slides then if it's short.
Sure. So we can do up to 45 minutes typically, so 40 to 45 minutes. And then we'll allow maybe 5-10 minutes for Q&A. And if you have time afterwards, you can stay as long as you'd like or feel comfortable.
All right, perfect. Thank you.
Okay, no problem. So Let me just go ahead and paste our Facebook stuff on before we get started. Where's our chat box? There it is. Okay. Hey, everyone. Listen, attendees. All right, so there we are. So please join if you haven't already. We're going to start really building that page, and we're going to have some really exciting things to share on both the commercial and residential side. So before our main speaker comes on today, I'd like to invite our friends at KB Homes, Carolina and Kathy, to share a little bit on what they have available currently. Carolina and Kathy?
You're muted, Carolina. Carolina, unmute.
Sorry, classic Zoom boo-boo.
There you are.
Patience. Thanks, Michelle. Very excited to be here sharing information about our upcoming or our current Link 33 community. Just relaunched the models. Kathy and I are both helping with Link 33 and the residences at Wheeler Plaza, where we have 2 homes left. But we're going to concentrate today. Link 33, we have KB Homes been in the business for 64 years, so very reputable, well-known builder. And I'm going to pass it on to Kathy in the next slide to talk about some of the benefits.
Yeah, I want to go over with you why working with us works for you. Basically, we are offering a 3.5% commission. That is fantastic at both Link 33 and Wheeler Plaza. We have the broker fast pass to offer to you agents that, you know, if you're on vacation and can't make it out, you just send us a broker fast pass and we'll show your client the home, no problem. And it's easier than resale. There's no bidding wars or inspection hassles. It makes it real simple. KB Home sales counselors handle all the paperwork. The escrows, the loan tracking, we'll take care of it all for you. And we keep you updated on a weekly basis. Make sure we keep you in the loop. We have move-in ready homes, and that's fantastic because you get your commission pretty quickly within 30 days if we close in 30 days. But all of that is fantastic.
Next slide.
Then I'd like to go over the benefits of purchasing new. We have a 10-year limited warranty. That is fantastic. It's not just your 1-year warranty that you get with resale. And then we have, of course, everything's brand new appliances, the construction is new, the design features, everything. So, and then we have Energy Star certified homes, which of course brings down the overall lower cost of your utilities. So there's lots of benefits to buying a brand new home. We'd love to see you come out and share those benefits with your clients.
Next slide, thanks. So Link 33, the name is derived from this great location. We're a half a mile to downtown Redwood City, Caltrain, shuttle stops, the bridge, everything's nearby. And there's just going to be 33 2- and 3-bedroom townhome style condos, as you see in this map, with a picnic area in the middle. If you're familiar with Redwood City, it's where Hopkins Honda used to be. So easy walk to downtown. And if you want to scroll through the next few slides, that's kind of a sneak preview at our models. We have the 2 bedrooms models. The 3 bedrooms are not modeled because there's only 9 of those. So you need to come see us as soon as possible. But we have 3.5% broker co-op, and looking at our February closings, that's over 500,000 that we're looking at sharing with our broker and real estate agent community to get our new homeowners in and happy and settled before the springtime. And while rates are great, we have a affiliated lender that we can work with as well, but we're also happy to work with your lenders. And we'll take it to the next slide to give you the information for our contact details. Again, I'm Carolina, and this is my partner, Kathy.
Hi, Kathy.
And phones numbers are there. And as part of that broker fast pass, to help you understand, we know you're out there busy showing, selling homes. If you can't bring your client in, call us, email us, set up an appointment. I will take care of you, and you'll still be covered for your 3.5%. So, thanks. Anything else to add? Kathy, did I forget anything?
Sorry. No, you went over everything. Yes, we have to show you. Thank you.
Thank you. Thank you, Michelle.
Thank you. Thank you so much. I think for some of the agents that are currently listening, just a quick 2 questions. One is, what's the price range of these units? And also, what's the HOA fee per month?
So the smaller two bedroom, 1150 square feet is going to start at $1,075,000. That's for the February move-in, fully upgraded floor to ceiling, cabinets, countertops, appliances, flooring. And then the 3 bedrooms are going to start closer to 137, 138. But again, for the estimated February move-ins, that's fully upgraded. And if we don't make February, and those 3 bedrooms go into March, you still get the value. You still get the great price. And then HOA at build out is going to be almost $385, and that's going to cover the normal stuff like reserves, professional management fee, building exterior, landscaping, and HO6. So your insurance on the inside for like cabinets and fixtures. So you get a lot for it.
Perfect. Thank you so much. Okay, so let's get started. Welcome to our CAREA Zoom webinar speaker event on the pandemic and post-election economy outlook for 2021 by our very own Alameda County Assessor Phong La. I'm Michelle Chen, a commercial real estate broker with GD Commercial and part of this year's board of directors for CAREA. And I'm honored to be co-hosting today's event with our CAREA past president, Dexter Lott, for today's highly informational speaker event with Phong. Dexter? Oh, Dexter, you're on mute.
Thank you, Michelle. Can you hear me?
Yep, perfect.
Happy New Year, everyone. I'm Dexter Latt. If you don't know me, I've been a board member with Korea for 13 years, just a little bit of time. I'm excited to introduce Assessor Phong La. He will be speaking on the upcoming changes of the real estate taxation under Prop 19, the changes from Prop 13 to Prop 19, and his insider view on real estate in general for 2021. I'm sure you have been all through quite a lot in the last several months, so we want to take this time to thank you for being here with the mindset of staying current and learning together. If you don't know the Chinese American Real Estate Association, we are a nonprofit organization established to promote the social and economic well-being of our associates and further the professional image of Asian Americans who are engaged in the field of real estate. We warmly welcome you to join and become one of our members. And for details, please go to our website, which is careea.org. That's CAREA.org. This event is being recorded for some of our members who cannot be here. So you can find the link in our website and also on our YouTube channel. So let's get started by welcoming Phong La. Phong La was elected on November 6, 2018 to serve as assessor for the County of Alameda and is committed to making government work for the people of Alameda County. Phong worked as an attorney in one of California's largest real estate law firms for the United States government, for a privately held real estate holding company and his own small businesses. Phong has also worked as an adjunct professor teaching real estate law, economics, and property management. What you guys also don't know is Phong La probably, I'm sure, took a pay cut doing this work for us people, because he was a very successful businessman and he was actually in the real estate field well known and was doing quite well. But he saw something was broken and was not working well. So he's here to make it a lot better. So let's welcome Phong La.
Thank you so much, Dexter. I appreciate the intro. And you hit it spot on, actually. I became assessor and I ran for assessor because I was very angry at the assessor's office. They had overassessed my real estate and my businesses. And it all started from there. And I kept complaining about it. And every time you complain about government, people say, well, you don't like it, do something about it, run for the job. And so I did. And, and so I'm happy to be here with you. Just so you guys know, I'm also a real estate broker. I also, in addition to my day job, I still help own and manage about 400,000 square feet of commercial property in mostly Alameda County, from Fremont to Livermore, and a little bit in Contra Costa County as well. I also have some residential property as well. And actually about 10 years ago, I did sign up to be a member for CREA. I remember going to the dinner back then it was ABC Restaurant in Milpitas. And someone at the table convinced me to pay for a membership. And so I did. but it's good to be with you. Let me give you a brief update on some of the things that have changed in Alameda County um, that will affect you, and then I'll go into Prop 19. So this last month, or in December, I was able to convince the Board of Supervisors in Alameda County to exempt business property taxes on all businesses with $10,000 or less in equipment. So for the most part, those are a lot of realtors, especially if you have a home office. You most likely have 10,000 or less, so you won't be getting that, $100, $150 tax bill anymore. Accountants, psychiatrists, really small businesses. And because of COVID and just the idea that we really want to help small businesses, I was able to convince the board, and they made a unanimous vote and agreed that we should not tax very small businesses. So I was very happy about that. That only took a year to get done. And then we also opened up a satellite office in Dublin. Right now, if you want to do business with Alameda County, you have to come to Oakland. And I didn't think that was fair. We have a large county, we have a growing population in South and East County. And so we wanted to add a satellite office so people can come get whatever they need done. So now the assessor and the recorder, clerk recorder, both have offices in Dublin, over on Dublin Boulevard. So you can go to Dublin. Actually, they're closed right now because of COVID. So we had to consolidate all the offices and we're not open to the public. But after COVID is over, you can, instead of going to Oakland, if you don't live in North County, you can actually go out to Dublin and do all the business out there too. Whether it be recording a document or getting your assessment heard or getting property information, all that is available out there as well. So those are a couple of things that we just got done this year, and I'm very proud of that work that we did to try and make it easier for everyone, especially you realtors who do a lot of business with our office and the recorder's office, title companies as well. So I've been getting probably about 50 to 60 phone calls a day about Prop 19 and what it means. And so I wanted to just briefly go over it with you. And I know you'll probably have a lot of questions at the end, so I'm going to save a lot of time at the end for questions. One other thing, they asked me to give an economic update and a forecast. Residential properties still continue to increase in value. We saw that the average increase in residential property throughout the county was probably in the 4 to 5% range. So anyone who owns residential property will still see their 2% adjustment next year. We're not going to freeze that adjustment because the data indicates that rental properties have continued to go up. Where the market has changed are businesses and business equipment taxes. For those of you who own restaurants and gyms, family entertainment centers, bowling alleys, theaters, we're working, and this is where I need help. I can't just reduce the assessments without data. So I've reached out to a lot of industry groups to ask them for data regarding the value changes in their industry. So far, I've heard from bowling alleys, some theaters. I need more. I need more data in order to justify a reduction. We all know that COVID has hurt a lot of businesses, especially those that were forced to close and not allowed to open. But unfortunately, when the assessor comes calling, most people don't respond and they don't pick up the phone. So we sent out a questionnaire sheet to just about every business that we thought was affected, hoping that they'll respond to that questionnaire. If you or your clients get a copy of my questionnaire, please fill it out. Let us know what's happening with your business. We need to know in order to make these reductions. We can't just make a reduction without having the information available to us. So I want to be proactive about it, but in order to be proactive, I need you and your clients to help us out as well. It's a win-win for everyone if we can make it happen. Unfortunately, like I said, people just don't like responding to government agencies. And I'm well aware that I didn't like responding when I was in private business. So I'm sure most of you don't either. But I promise you it's helpful and it'll help everyone if you do respond. That is the COVID update. People are asking whether they see a recession or a drop in housing. The recession is more of a business recession in terms of business revenue. Our county is so, I guess you can think of it as fortunate, and that our housing supply and our housing stock is still low, and interest rates are low. So I imagine that it'll still continue to drive prices up. as we move forward. And I think the supply issue is one that really needs to be addressed. All right, so Prop 19, what we know and what we don't know. And let me see if I can take control of this screen. Michelle, if you could help me out, I'm trying to move. There you go. What's that? All right, so first disclaimer. This is for informational purposes only. This is not legal advice. So please don't accept it as legal advice, and get legal advice from your attorney. Get tax advice from your CPA, your accountant. Don't rely on this other than for informational purposes only. That was my disclaimer. So what happened in there were two ballot initiatives this last year that affected property taxes, 15 and 19. 15 was the reassessment of all commercial property. That failed. And then 19, which had two components, a base value transfer and a parent-child exclusion change, did pass, and it barely passed, 51 to 49%. And one thing I did not note in the slide was people were asked who put Prop 19 on the ballot. It was actually the Realtors Association with the state legislature that put Prop 19 on the ballot. What is Prop 19.2? There are two main components of Prop 19. It is, like I said, the base value transfer for anyone who is 55 or older and fire victims and disabled individuals. And then the second part of Prop 19 affects parent-child exclusions for parents who want to give their property to their children and what that means for property tax terms. So I'll give an example of what the law is now, right? The law now is based on Prop 13, which many of you have heard of, which was passed in 1978. A good example of Prop 13 and how it affects us. Here, my parents bought a house in this scenario in 1980 for $100,000. Their assessment starts at $100,000, 1.25% roughly, right? 1% plus special assessments comes out to about 1.25. So they pay about $1,250 a year in property taxes. That same house is worth $1 million now. The property, though, is protected in that the increase in property taxes only goes up by 2% a year while they still own it. So 40 years later, their assessment is about $200,000 and they pay about $2,500 a year in property taxes. It doesn't matter whether they live in the house or rent it out, right? Prop 13 protects them as the owner. The only time you get reassessed is when there is a change in ownership or when there is new construction that takes place. If the new family buys that same house from my mom and dad today in 2020 and they pay $1 million for it, their property taxes go up to the full market value of $1 million for that same house, and they would pay about $12,500 in property taxes. Prop 13 restricts the increases to 2%. That's the cap. That's why people who own property like Prop 13. The other part of Prop 19 is the parent-child exclusion. What happens when you give your house or you sell your house to your child? There are two parts of Prop 13 that affect parent-child. The first was passed in 1986, which allows the parent-child exclusion. The second was the grandparent-grandchild exclusion, passed in 1996. What's excluded right now? If it is your primary home right now, if it's a house you own, irregardless of the value of the home, you can give it to your child or sell it to your child, and they get to keep your property taxes. So we'll go over some examples in a second, detailing what I mean. If it is a non-primary home, an investment property, a rental house, a vacation home, a shopping center, you can transfer up to $1 million of assessed value, not market value, of assessed value to each child, and that will be excluded from reassessment. So going back to that first example, my parents bought the house in Union City for $100,000 in 1980. They're assessed at $100,000. They pay $1,250 in property taxes. House is now worth $1 million, but they only pay property taxes for $200,000 worth of assessments. That's $100,000, adding 2% a year compounded, right? It comes out to about $200,000 right now. They give me that house. right? I file a claim with the assessor saying that my parents gave me that house, right? Right now, the law gives me 3 years to file that claim. Now, 19 changes all that, and we're going to go into it in a second. So, but I want you to be aware of what the rule is now. The assessment after my parents give me that house stays at $200,000. If done properly, you fill out the right paperwork, you send it to the assessor, my office, would then allow you to keep that low property taxes. If you don't do it right and you don't file the form with us, you end up getting a bump in the property taxes to $12,500. For rental properties, there's the cap of $1 million of assessed value. So in that same example with my mom and dad with the house that they bought in 1980 for $100,000, it's now assessed at $200,000. They can give me 5 of those houses under the current law, and I would not get reassessed. People also ask about trusts. I'm not going to go into trusts because they're actually very complicated instruments, and there are different rules that affect trusts and LLCs. But I'll tell you right now that if you own your home in an LLC, Prop 19 is really going to affect you. So listen carefully when we talk about LLCs later. A trust is treated very similar to an individual. Change of ownership of a trust is when a beneficiary is changed in the trust. So again, it's complicated. Talk to your attorneys about it. We review all trust documents when there's a deed that comes in to see if there's a change in ownership or not. Base value transfers. Under Prop 13 right now, if you're 55 or older, you could sell your house, buy another house, either within the same county or within 10 select counties that have agreed to participate, and keep your low property taxes as long as the house you buy is at or below the market value of the house you sold. Now, there's some limited exceptions to that allow you to bump it up a little bit, either 5 or 10%, depending on when you buy and sell, but that's details I really don't want to get into in this slide because it gets very convoluted. If you have specific questions about it, feel free to call our office and we can walk you through it. But this part of Prop 19 is where people have very few questions about. It's the parent-child where people have the most questions. So I'm going to focus most of the time on that. But know that on April 1st, the law for base year transfers changes so that you can go up in value and you can also go across the state. I'm going to give you an example of what the current law is right now for base value transfers. So if you are a couple in Alameda, you bought a house in 1980 for $200,000. The house is now assessed at $400,000. You pay property taxes of about $5,000 a year. The house today is worth $1.2 million. You decide to sell that house for $1.2 million and buy another house in Livermore to be close to your kids for $700,000. You get to keep your lower $400,000 assessment, even though you paid $700,000 for that replacement house. Right? That's what the current law allows you to do. I'm sorry, I'm trying to go to the next slide and it's not. Oh, there you go. So you must complete the sale and purchase within 2 years in order to have this apply. Once you make the first sale or once you make the purchase, the clock starts. And you have 2 years from that date to do it. And remember the market value, when we're talking market value, not your sale price may not be the market value, right? Market value is what we look at. Must be the same or less than what you sold the home for. So Prop 19, what does it do and when does it take effect? And here's the big part because it takes effect real soon. The first part, parent-child transfer rules change. Those changes start February 16th. So that's in a month. The second part for base value transfers, those changes take place April 1st. So that's about 3 months. So the easy one, base value transfers. So like I said, you can now, starting April 1, take your low property taxes with you anywhere across the state. It's not restricted to the 10 counties any longer. Your replacement property now can, after April 1, can also be of higher market value than what you sold your initial home for. Remember, originally, the current law is that the house you buy has to be at or below the market value of the house you sold. Now you can go up in value as well. There's a different equation if you go up in value, but for the most part, you get to keep most of your low property tax basis with you. A quick example on the next slide. So similar example, a couple buys a house in Alameda in 1980 for $200,000. The current assessed value now, 40 years later, is $400,000. Their property taxes are $5,000 a year. The house is worth $1.2 million. They sell the house, buy a house in Livermore for $700,000. They get to keep their low property tax basis with them. Downsizing still stays the same. That part of it didn't change. The part that did change that allows for, I'm going to skip through this slide. The part that did change is the upsizing now. So if you have money, you're 55 and older and you have money, you want to buy a nicer home, you can take some of your low bases with you. So similar example, a couple buys the house in Alameda in 1980 for $200,000. The assessed value is $400,000. The property taxes are $5,000 a year. They sell the house for $1.2 million. After April 1, so after 3 months from now, they buy a house in San Diego for $1.7 million. So they sold their house for 1.2, they buy for 1.7. What's their new property taxes? I'm going to go over the math with you in a second, but remember their old property tax is $5,000. They buy the house for 1.7. If they got completely reassessed to 1.7, they would pay $21,000 in property taxes. But their new property taxes, instead of $21,000, will become $11,250. It's the original assessment of $400,000 plus the difference between what was sold and the new home. The difference of $500,000 is added to the original base. So the new assessment becomes $900,000 for a house that was purchased for $1.7 million. So here's just a graphic just to show you what that looks like, right? The original home, even though it's valued at 1.2, they only pay property taxes on $400,000 worth of assessment. The new home, even though it's valued at 1.7, they only pay property taxes on $900,000 worth of value. Parent-child transfers. Here's the one that we get all the phone calls about. What does this change mean for everyone? Effective February 16th, the principal residence, you can transfer your primary home to your child, and your child can keep the low property taxes as long as that child moves into that house and makes it their primary home as well. Right, let me repeat that. It has to be the primary home of the parents, and then after the transfer, it has to be the primary home of the child. The child has 1 year after the transfer to file for a homeowner's exemption and let the assessor know that it has become their primary home. On February 16th, the exemption for second homes, rental properties, vacation homes no longer apply. Anytime there is a transfer of a property that is not a primary home, it will be reassessed, regardless of whether it's from parent to child or not. There's a cap on the primary residence transfer as well. It's up to $1 million of assessed value. We're going to go over some examples in a few minutes. So I just said all this and I'll say it again. So what does it mean? What has been removed? What have you as a taxpayer lost and as a property owner have lost? That means right now, starting February 15th, any transfer of rental properties gets reassessed. Any transfer of commercial properties get reassessed. Any transfer of industrial properties get reassessed, and any transfer of vacation homes will get reassessed. The exception for primary homes, like I said, if it's the parent's primary home and it's proven by the fact that it's their homeowner's exemption claim on it, must become the child's primary home as well in order for this to apply. And it's only the first million of assessed value on top of the assessment. that counts as a transfer. Everything after that is added to the assessed value. I'm going to also give you a little bit of a warning. I know people are in a rush to try and record all this, and there might be some title companies on this call. The recorder's office is closed on February 12th, that Friday, and February 15th, that Monday, before Prop 19 takes effect. So realistically, the deadline is not February 15th, it's actually February 11th. And also the recorder's office is not open to the public right now because of COVID. So there are going to be some issues, and we're going to go over some of those issues with the recorder's office in a future slide that you all need to be aware of if you're going to be doing this. So going back to the same example and how Prop 19 affects this. My parents buy the house in Union City for $100,000 in 1980. The current assessed value is $1 million. The property is the current market value is $1 million. The current assessed value is $200,000. We're paying $2,500 a year in property taxes. Excuse me one second. Sorry about that. I just had to ask my daughter to go in the other room for a second. Today's a work from home day for me. If the sum of the assessed value plus $1 million is greater than the market value, then they keep the current assessed value. I'm going to go over an example of this. And then what happens if it's above that amount? So I'm going to give you an example where the assessment is tacked on rather than keeping the low assessed value. So if my parents bought a house in Piedmont for $100,000 in 1980, the property is now worth $2 million in 2020. But the current assessment is at $200,000, right? 2% a year. So my parents give me the house. The assessment goes from the $200,000 current assessment to a new assessment. The value above $1 million plus the assessed value is the difference of $800,000. So you have assessed value of $200,000. So you look at 200,000 plus 1 million, that's 1.2 million. Anything above 1.2 million is added to the initial assessment. So there's a difference of $800,000 above 1.2 million, difference between 1.2 and 2 million. You add that $800,000 to the $200,000 original assessed value, you get a new assessed value of $1 million. So property taxes then go from $2,500 to $12,500, which is a big jump, but it's still lower than a full reassessment, which would have put it at $25,000. And remember, the child, me, if I take that house from my parents, have to live in that house within a year after I take ownership of the house. So what does it mean in terms of property tax differences? So if my parents keep the house, property taxes stay at $2,500. If my parents transfer the house to me before February 15th, I get to keep the $2,500 property taxes. If my parents transfer the house to me after February 15th and I choose to live in that house, then property taxes go up to $12,500. If my parents use the house as a rental property and transfer it to me after February 15th, or if they transfer it to me after February 15th and I use it as a rental house, property taxes go up to $25,000. A lot of things to be concerned about when it comes to property transfers, right? So my first advice is talk to a lawyer, talk to your CPA and your accountant, because there are other tax issues that you need to be aware of, right? What are the legal issues and what are the tax issues? The legal issues, well, obviously, if my parents give me the house, they no longer own it, I own it. I could kick them out. I could get sued and lose the house. I could get into bankruptcy. I could get divorced. I could be in a situation where I die. And then if it goes back to my parents, then it gets reassessed. And then what are the tax consequences other than the property tax gain? Well, if you gain in property taxes, you could lose in capital gains tax, right? Right now, my parents have a low basis on that house. If they give it to me, I have to keep that low basis. So after they give it to me, if I sell that house, the difference between their basis and the market value is what I would have to pay in capital gains tax, which could be quite significant. Whereas if I waited until they died and I inherited the property, the basis gets adjusted to the market value. So afterwards, if I sold the house immediately after their death, I wouldn't have a capital gains component to pay. So it's important to think about those things. That's why it's important to talk to your CPA, talk to your attorney, and then of course, talk to your family. What's right for them, what's right for everyone, because there's a lot to consider. You gain in not having to have an increase in property taxes, but you potentially lose in not, you potentially lose in having to pay capital gains tax. Something to think about, like I said, talk to your kids, right? Or if you are the kid, talk to your parents. What are the long-term plans? Do they want to keep the property in the family? Do they want to sell it right away? Because Prop 19 may or may not affect you depending on what your long-term goals are. What we don't know, right? So right now, here's the problem with Prop 19. It was written really poorly, right? They want the assessors to implement it, but they didn't give us enough to implement it. We don't know a lot of things that we need to know in order to make it implemented well. With the base value transfers, the first question I had was, what happens if they sell the house before April 1, but buy the new house after April 1? Do the new rules apply or do the old rules apply? We're waiting for an answer. The assessors across the state got together and we had about 5 or 6 different meetings that went 2 or 3 hours long, and we all disagreed about what it should be. Unfortunately for all of you who work across different counties, if the state doesn't step in and let us know what the guidelines are, each one of the assessors will make up their own rules for their county. So the answer I give you for what I'm going to do in Alameda County might be different for what's going to happen in Santa Clara or Contra Costa County. Actually, I'm sure it'll be different because the other assessors also disagree with each other and with me about how a lot of this will work. Will the sale of the original residence prior to April 1 should be grandparented into the 2-year window for making a transfer? I believe it will, but again, we're waiting on specific guidance. If I don't get any guidance on it, I will allow it because I think it's the right thing to do. Oh, you can base value transfers. You can do it 3 times as well now after April 1. Right now, you can only do it once in a life. After April 1, you can do it 3 times. Who will keep track? I don't expect that the counties will keep track because you could go across the state. So I think the state will keep track for us. So you're going to have to report that to the state. What happens in multiple transfers? We don't know yet. I'm guessing you would keep the original value of the very first transfer, but I don't know. Can a parent transfer consecutive principal residences to children? So if you transfer one house to child A, move into house B, make it your primary home, transfer it to child, second kid. We're waiting for the state to tell us, but I'm guessing if the state doesn't tell us anything, I would say in our county, yes. I just got a question about whether we'll share these slides. These slides are actually on my website. So after this is over, I actually have a video on my website of giving this presentation as well to other realtor groups. So feel free to go there if something isn't answered or you missed something because I went too quickly. Go to my website. There's a Prop 19 tab. You'll get my presentation and you'll get the slides. And there's a frequently asked questions part as well about Prop 19. How long does the child have to live in the principal residence? So here's where we have all disagreed. I think what's going to happen, and because we just voted on it as assessors, is that the child will have to live there in order to maintain the lower tax basis. The moment they move out, it gets reassessed. And we were talking about whether we should require the child to file every year that they are still living there. And I think that's what's going to happen because that is part of the recommendation to the state to make this work. How will counties determine that homeowners is still valid? Homeowners exemptions are required, or excuse me, the property owner is required to file that and certify it with the assessor. So the form is on the website now. and it's tracked by your social security number. That's how we know whether you have more than one or not. And if you have more than one, we'll remove all of them. Can children transfer to their parents? Under the current law right now, before February 15th, yes, a child can give their house to their parent and keep the low basis. The new law did not include that. So my guess is after February 15th, the state's going to say the law that the voters passed did not include that. So it will no longer be allowed. Here's a couple of warnings to you who are trying to record this, right? In some counties, the assessor is also the recorder. In Alameda County, I am not the recorder. I am only the assessor. There's a separate recorder in our county. So in our county, it's a separate individual with a separate department, a separate agency. I asked the recorder what some of the issues are because we're trying to coordinate to make sure that things work well so that things don't fall through the crack. So they are closed the 12th and the 15th, like I said earlier. The deadline is not extended. And the reason why the state will not extend the deadline is because you, the voters, voted on specific language in Prop 19 that said it must take effect on February 16th. So because of that, we don't have any discretion in extending this. I am not happy about that because when the voters passed this, they didn't think about how hard it would take or how long it would take to implement this from the assessor side. So we're doing everything we can. We have to change our entire computer system now to make this work. So we have our programmers working overtime to try and get this going. What date do you determine if you record a deed? We take the recording date. The law says that we do not take the signature date. So if you sign a deed transfer on February 1, but you don't record it until February 20th, it's too late. We are required to take the date on the recorded deed. And here's the problem. The recorder is backlogged. So if you mail in your recorded deed now, they won't get to it till March. The best way to move forward is to do an electronic recording. There are companies out there that will file it and record it electronically for you. Electronic recordings are usually done the same day, but the recorder made me say usually because there's no guarantee it will get done the same day. If they become backlogged because everyone files a recording on the last day on February 11th, they're not going to be able to get to everyone on February 11th. I was asked about what about the postmark? We don't see the postmarks at the assessor's office. What happens is when you record a document and you mail it in, the recorder takes the envelope, takes the documents out of the envelope and throws away the envelope. They scan in the deed, and then some weeks later, sometimes up to 11 weeks later, they get it to the assessor. So we may not see it for up to 11 weeks. So I don't ever see the postmark on the envelope. So get the recording date in right away. There are limited exceptions to that. I have asked the recorder to please note on each deed the date in which they received it. But remember, they're only human and they are swamped. So if someone forgets to note a date on it, I don't know when it came in. So I can only go by the recording date. And if the recording date is after February 15th, you're going to be out of luck. So again, I emphasize, if you're going to do this, do it right away. Get it in, get it done, or else you might be out of luck. Remember, every county is different. Every county has different rules. These are questions that we got from some of the other webinars that I did on Prop 19. Do both spouses have to be 55 to qualify for base value transfer? No, only one spouse has to be 55. What if my house is in an LLC? LLCs do not get a homeowner's exemption. So if the parents own a house and they decided to put the house in an LLC, and then they transfer the house to the child, it gets reassessed. Because in order for you to, after February 15th, in order for you to qualify for a parent-child exclusion, the parents have to live in that house as a primary home. Evidence that it's their primary home under Prop 19, as written in Prop 19, is the homeowner's exemption. In order to get a homeowner's exemption, the house cannot be in an LLC. So if you don't understand that, talk to your lawyer, because that is very important to know if you decided to put your house in an LLC. Is the parent-child exclusion automatic? No. Exclusions are not automatic. I don't know if the person that you gave the house to is your child or not until you tell me it's your child, right? Just because you have the same name doesn't mean it's your child. So you are required to file a parent-child exclusion form with us. And do not send that form to the recorder's office. If you send it to the recorder's office, it will likely not get to the assessor. The recorder doesn't care about parent-child exclusions. They usually take it from the deed, separate it from the deed, and stack it in a pile somewhere else. And if they feel like it, they will forward that pile to the assessor. We don't always get it. I would say about 30% of those forms don't ever come to us if you send it to the recorder and not to us. Send it to us, the assessor's office. Remember, talk to your lawyers about it. Prop 19 affects second homes. I talked to you about the possibility of capital gains and loss of step up. So talk to your accountant about it. If you have a home that you're planning on transferring, and if your child doesn't plan on keeping it for a long time, those are things you need to think about. See some of these other questions. I'm going to skip some of these questions and go into the Q&A because they may not be questions that you have. So let me get to the end of this. So one of the services that I decided that I thought was important to provide to our residents in Alameda County is a free legal clinic for people who have questions. Now, if you call my staff and ask a legal question, they're going to tell you we can't answer the question. We're prohibited from giving legal advice to anyone. So what I did was I created a free legal clinic that my office is funding. These are some of the dates of the upcoming clinic. As you can see, the next one is next week. The clinic is twice a month, every third Thursday and Friday. You're more than welcome to call and schedule an appointment or try and get help whenever you need it. Feel free to reach out to them if you have that need. Next slide. Generic email address for my office and the website if you have questions. Some people ask for my personal email about this. No, I get way too many emails and phone calls as it is already. So my office staff will help answer questions as well. I will do my best to respond to questions personally. But the truth is I get over 100 emails a day at my office. And I have a tough time being able to respond to every single one of them. So be patient with us, be patient with me. This is a lot of work on our office right now. We've been short-staffed and we're doing the best we can, especially with COVID, with most of my staff working from home. It becomes a challenge to try and implement this. So please be patient with us. It's not that we don't want to help. We're trying to help everyone that we can. Sometimes these phone calls that people call us on, they stay on the phone with us for 45 minutes to an hour, right? And we're trying to give them the same information over and over again. So just be patient when you're calling. There's a backlog of phone calls every day. With that, I'm going to say thank you, and I'll answer the questions now. So do you want me to go into the chat and just answer, or do you want to unmute people?
Yeah, I can actually, no, we'll just read off the questions that way it's most easy. So everybody, thank you so much, Phong. So let me just ask everybody to submit their questions in the Q&A chat box instead of the actual chat box, and that way we can get it answered. I know Danny just asked if we can download the slides. Phong had shared that it was on his website, so go ahead and take a look at that. I know we do have a question from Julie asking for the base value transfer, and we'll jump right in to Q&A, is for 55 years and older. Can I buy first and sell later?
Yes, you can. So you can buy your replacement home first and sell later.
They have up to 2 years to do that?
2 years. You have 2 years. So you can buy now. You have up to 2 years to buy your replacement property.
Perfect. let's give it a few minutes for people to come in and jump in with their questions. I'm sure they're just trying to digest. And, as a commercial broker myself, I do have a lot of landlords asking, is there any relief coming to the commercial side of, real estate? Can we get their property taxes reassessed because those triple nets are, they're not paying triple nets and they're not paying rent. So how, if are we going to, if you can just speak upon that?
Yeah, that is a very common question as well as far as going forward. And that's why I emphasized at the beginning the questionnaire that we sent out. We sent it out to apartment owners. We sent it out to shopping center owners. You're a commercial broker, every property is different, right? So I'm a commercial owner. I have some properties where I'm getting full rent, right? And I have some properties where I'm getting less than 50% of the rent paid. So, and then also have some properties where we bought it so long ago, even though I'm getting very little rent, even based on an income approach with the rent that I am getting, the value is still higher than the assessed value because we bought it so long ago. So it's individualized for each property. So it's very important that you let us know what's going on with your property, because your property may or may not qualify for a reduction, depending on who you have there, what you have going on, and what's happening. So it's really hard for us to make an across-the-board decision for everyone, especially when it comes to commercial property.
Thank you, Phong. For the form or the questionnaire that you were talking about, is that found on your website as well, or can people?
No, we send it specific to property owners. So we have different forms depending on what type of property it is. So for instance, apartment owners got the apartment owner questionnaire, right, where we're asking about the rent that they received and any rent concessions that they gave. Whereas an industrial property might have a different one. A restaurant will certainly have a different one. So we ask for different things, right? Because with restaurants, we're also asking about your restaurant equipment, because you're taxed on your restaurant equipment as well, which is something that a warehouse owner won't have. So just look for the questionnaire. We just sent it out about a week ago. Don't throw it away. It'll have my name and my office logo on it, right? Don't throw it away. Open it. It's a one-page questionnaire. Like, if we need more information, we'll reach out to you, right, after we get your questionnaire. But without that questionnaire, we have no basis to start an evaluation on.
Perfect. Thank you. Eunice is wondering, are there any legal challenges regarding Prop 19 going on right now?
Yes, there are. So in California, the California Constitution says that any ballot initiative must be a single issue initiative, which means they can only have one issue on it. Now, there's an argument about whether Prop 19 had two issues or whether it had one issue. In the assessor world, we think it's two issues, right? Base value transfer and parent-child exclusion as two separate issues. However, you can imagine how a layperson who's not an assessor might see it as one issue, assessments, right? Both issues deal with the overall assessment world. So a judge might see it as, no, it's not two issues, it's one assessment issue, so it works. I'm of the opinion that it should have been seen as two issues, but I think that a judge will see it as one. So I personally don't think the lawsuit will prevail, but there was a lawsuit filed, and we'll see what happens. But I'm working as if we're going to implement Prop 19 in a month.
Wow. Okay. Thank you. Anybody else who have questions, please submit them now. Phong, I wanted to also just thank you so much for joining us today. And what other challenges are you seeing currently at your office that would be affecting, our residents in the county that you've been kind of just, what are the, frequently asked questions? I know you had a few that you've answered already, but what are some of the concerns that you've been looking at, and then any solutions that, that you might be able to help with?
Yeah. I think the biggest question is always, what should I do in terms of my house? I want to make sure my children benefit from my hard work, right? Many of our parents have worked very hard to build this nest egg. And in America, real estate is, the culmination of hard work for the most part. For most people, owning property is what, I'm an immigrant myself. My parents and I came here as refugees from Vietnam. right? My parents came here without a penny in their pocket, didn't speak a word of English, right? I was almost 3 years old, and imagine how hard it was. They didn't have anything, but they built up, a business, built up real estate, and now own real estate. They want to make sure it benefits their children. They don't want to see it go away. And my advice to everyone is have that conversation with your kids, right? Because if you have rental property, let's say you have 1 or 2 houses even, or a duplex or a triplex, your children may not want to be a landlord, right? It's not easy to be a landlord right now, right? And so if they don't want that, you may not want to pass on that property to them now. You may want to wait till after your death, so that way they get the step up.
Step up,
right?
yeah.
So it's very important to have an honest conversation. Your kids are going to want that property now, right? Regardless of what regardless of what the tax consequences are, right? Most kids will say, "Oh, you got $1 million for me? I'll take it." But you have to have that honest conversation. Okay, what are you going to do with this? Are you going to keep it, and are you going to rent it out? Continue to rent it out to get monthly income? Because if you're not, and you're going to sell it, we have to pay 35% in capital gains tax, at $1 million property. In that example I gave you with my parents' house, right? $800,000 in capital gains income, taxable income, right? 35% income tax on it, or capital gains tax on it. You're looking at losing $300,000 in capital gains tax. That's a lot of money, right? So is it worth it for my parents to give it to me now if I'm not going to keep it as a rental property? Probably not, right? I might be better off just saying, "Hey, mom and dad, why don't you keep it? Keep renting it out, and we can, maybe share the income rather than, me taking it and selling it." So those are honest conversations that everyone has to have with their family. And no one can ever answer that question for you. Only you and your children, or you and your parents, can answer that question for yourselves.
Thank you, Phong. I know we have, we're just at 1 o'clock currently, but I just have one last question. I know a lot of people are probably thinking of it. Nobody asked it yet, which is, you mentioned that the state would be tracking all of the inter-county transfers, and that just sounds really complicated because, like, again, you said all the county assessors have a different idea of how they're going to track that. And so do we have any idea as to what type of tracking or form? Is it by like a utility bill, how people usually do with school districts, or how do they anticipate tracking people? Have you guys discussed that yet?
I think what's going to happen is every person who applies for the base value transfer. So if you move from Alameda County to, say, Contra Costa County, right? You go from Oakland to San Ramon. You would file a base value transfer form with the Contra Costa County Assessor. And what I'm going to guess will happen, because this happens with other things right now, is that assessor will keep a list of everyone who's applied that year and forward that list to the State Board of Equalization, who right now, for the most part, keeps track of a lot of this stuff for us. And so they will compile it with all 58 counties, right, to see who went where. And then they will report back to all of us assessors and say, okay, here's this year's list, right? I'm guessing that that's how it's going to work. That's how it works right now with homeowners exemption. So I'm thinking they'll just spin off that and work it that way.
Awesome. Okay. Thank you. Thank you so much, Phong. I so appreciate your time today. Since we have no more questions, I'll go ahead and share the slides with everybody who's attended, and then everybody who's currently still on, please feel free to contact Phong's office with his email address as stated here, not his personal email. And then we'll see you next time on our next webinar. Thank you so much again. Thank you.
Let me say one other thing real quick before you go. If you have any advice for me as far as whether, how our office could be better in working with you, or how I could be better in working with all of you, feel free to share that. I'm always about constructive criticism. Even this presentation, if you think it could be better, I just got a text message from a friend who's on here who told me to smile more. If there's any advice you have for me or suggestions, please feel free to share it. I appreciate all constructive criticism to improve my office and to improve me as your elected representative. So thank you very much for your time.
Thank you so much, Phong. Take care, everyone. Have a great rest of your day.